I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Very interesting week in the stock market and politically in the United States. I've been thinking for the past couple of weeks that stuff with Donald Trump and his congressional Republicans might actually come to a head by November because we have a tax bill that's supposed to happen, a budget deadline. By the end of September, they got to pass a bill to balance or to extend the debt ceiling and so forth. And so far, they haven't been able to work very well together. The health care bill failed to pass in the Senate. However, part of the reason it failed is because when the House passed the bill, Donald Trump denounced the bill, and he used the word saying it was mean, and that made it very difficult for the Senate Republicans to get any political capital from the people of the United States, pressure or whatever, to pass it. The president himself wasn't helping them, and the bill failed, and then he turned around and blamed them for the bill failing. And this has caused some bad feelings or blood or whatever you want to call it between the Senate Republicans and Donald Trump. And the danger is that for the financial markets and frankly the U.S. economy, that they're just not going to get anything done and blame each other. They've already been doing that, or the Trump has blasted Senator McConnell last week over the health care bill failing, almost actually suggesting he should resign over Twitter. But I thought that this could get worse. This sort of situation will get worse in October, probably apparent to people by November, and that would impact the financial markets in a negative manner, will cause a decline, a correction, maybe 15% on the stock market. It could even be worse because we have record high valuations, record margin debt, and we've had up until this month record low price volatility, which has the risk of boomeranging. So I think we're actually in a very shaky situation, even though the stock market made a new high roughly exactly a week ago. We've come off that high a little bit. The 50-day moving average is support now for the S&P and the NASDAQ. We bounced off of that. That level is at 2450 on the S&P 500. I think if we break that, we're going to go to the next support level, which is around 2400 or 23, somewhere between 2350, 2400. And if we break that going into October, it would really be big trouble for the stock market. And one thing that has me concerned about the technical condition is that the internals of the market are bad, meaning most stocks are performing worse than what the Dow is performing like, or the S&P 500. More stocks are falling than going up. You can see this in the Russell 2000, lagging the other averages, but also the percentage of stocks above the 200-day moving average has been doing poorly. It's been in a sharp decline over the past week. So I think we're in a shaky technical pattern in the stock market. However, I have to say the events this weekend have me a little bit taken aback that the political controversies in Washington surrounding Donald Trump and his chaos may make all this even happen quicker. But we'll just have to see.
Would Donald Trump be the black swan that sends the market diving?
Well, when a stock market declines, typically getting a correction, a 15%, a 10%. I wouldn't call that a black swan event. It's not a big deal for that to happen. And typically when a drop like that happens, there can be some news event that surrounds it or appears to be the cause of it. It's hard to say if these really are or not. But with Trump, we are in a strange situation that could turn it into a black swan, so to speak, because he's the president of the United States. He's the most important person in our country. He plays a role, not just, he's the commander-in-chief, but an important role in American culture, and I'm not sure how to put it, the spiritual life of the country, or whatever, however you want to put it. And this weekend there was a terrible riot in Charlottesville, Virginia. I actually went to college there, and I've been in if you've seen these images on TV, I've been in the area where these Nazi and Ku Klux Klan extremists were marching around with torches. I used to walk there 2 or 3 times a day as a college student, and it's just a bad event. And Trump's handling of it, I think, is very disturbing to his leadership of the United States. He hesitated in calling these people out. Finally did that on Monday after being pressured by Republican congressmen and senators. But then last night he completely backtracked to what he said and almost seemed to he basically said that the extremists, Nazis and Ku Klux Klan people are morally equal to the counter demonstrators, and that's something that's just not going to. It does not seek to stop the situation or make it better. If anything, it has the risk of almost guaranteeing that these people will try to do more events like this just to get attention, and more people could get hurt. But more importantly, for the financial markets, is that it seems to be setting up a situation where Trump seems to be very radical or like a wild man, is willing to turn his back on the establishment of the Republican Party or both parties, or just common decency. And that could set up a black swan where he just keeps lashing out like this and hurting business confidence. You've already seen today his entire business advisory council made up of companies such as 3M, which is in the Dow, Merck. There's like 20-some companies. The head of AFL-CIO, who actually was a strong supporter of Donald Trump during the election, he resigned, I think, last night. So you're seeing the business community of the United States try to send a message to him through the resignations, and Trump actually abolished the whole council today because he was being embarrassed by these people resigning one by one. And it appears that, things can change, things can get better, but just at the moment that we're speaking, he has kind of reduced himself to simply catering to very extremist elements inside the United States, and not the business community, not the mainstream Republican Party. And if he's going to continue down that road, it will have dire consequences for the financial markets. If he's going to lash out like this, what's going to prevent him from blaming the Federal Reserve if the stock market falls, and just hurting people's confidence in the financial markets and the U.S. economy? So hopefully, someone yells at him, maybe his daughter will yell at him, or his son-in-law or something, but it is continuing going into October. I do think we are going to be in a troubling situation. It's not going to be a permanent situation, but it's quite bizarre to be living in a country and seeing the president act like this.
Well, you asked me about Canadians people refer to Trump as the leader of the free world, and we're very quick to say we didn't vote for him. And I think everybody else around the world who's a democracy will say the same thing.
Well, one thing I'll say, because I went to college and I live in the South, and I don't. The country is kind of culturally divided in a certain sense, but the idea that the people that are that he's catering to, the Confederate flag people or people more extreme than that, really, that they are such a small segment of the country that it's not really for a political leader. We're not living in the wider republic of the Germany in the 1920s or something. It's such a small segment of people in the United States that actually appeals to, that he really won't have much of a political future. If he simply keeps making statements like he did, or there's more terrible, if these people do more demonstrations like that, his support will greatly diminish. So I don't even know, how he would last in office beyond his term, at least. And who knows, they could turn him into somehow just almost like he's a figurehead there, ranting and raving, and most people will just stop paying attention to him. That could actually end up being where this ends up going. So it's which in itself is and the bottom line is when he won, and even during the election, the phrase I was using to describe him, and it wasn't his fault, was we're in a situation in the United States of political instability. That's frankly why he won, and that's not something he created himself. I actually blame it on the Federal Reserve's policies of quantitative easing, the legacy of the 2008 financial crash, where, yes, the stock market went up, but the regular person in the U.S. economy really did not benefit. So there was a lot of, for good reason, anger or desire for someone to fix things. He played into that last year. Clinton wouldn't say anything was wrong, and so Trump won. But it's all political instability, and there's no sign that anything he's doing is going to fix any of those problems at all. And now we're at a strange tipping point where he may actually make things worse through his own behavior. So it's quite a strange period we're entering. And one thing about it is, we're talking about these news events, talking about the president, but the bottom line is, we're all, the listeners and me and you, we're all invested one way or the other in the financial markets, and I know that's what people really listening to the show for, and how to deal with a situation like that. I think the simplest thing to do is to actually reduce risks, not to be fully invested in the U.S. stock market if the situation persists, and diversify to other markets, diversify even into bonds, because they'll probably go up if the stock market declines or the economy actually tips because of consumer confidence faltering. But we're not at that situation yet, but I fear that's where we could be starting to head to by the end of September or early October. And gold and mining stocks are also something I think people should look at investing in. I'm invested in them myself, of course, but so far they're doing better than the stock market over the past 7 days, which is something they haven't been trading like since about September last year. So there are places to make money, and really I think gold and silver and the mining stocks are probably going to go up regardless of what's going on, because I think they're in the second year of a bull market. So I think they're in a good safe haven spot to put some money to protect yourself from any chaos that might increase from Washington, D.C., whether you like Trump or don't like Trump. And people overseas have a much more negative opinion of him than the average American does. But so there's people in the United States that do like him, and I just tell them, if you don't like me questioning his leadership, at least recognize that he represents political instability. No one can deny that, and hedging yourself from that, blame it on someone else besides him if you want, but it is the bottom line. That's what we're experiencing in gold and silver, and even a little bit of bonds if you want for a period of time is a good way to diversify.
We'll have more with Mike Swanson right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Mike Swanson. Mike, you said diversify. Could foreign markets, say the Japanese stock market, be a good place to look at? Japan's projection is 4% growth this year.
Well, the Japanese market has performed very well. It's gone up more than the U.S. stock market has this year, which is actually an ironic thing. It's up almost 10% or so. And the funny thing is most foreign markets are actually up more than the U.S. market because we kind of have started losing steam around March after the big rally at the end of last year. So, yeah, I wouldn't put all my money into it, but it's relatively speaking, I think it's a good, it can be an okay place to put some money. But I would say, though, that if the so-called black swan type event happens, and I would say that doesn't mean the stock market's going to crash, but if we go beyond the 15% drop to 20% or 25%, then it probably would drag down other markets too, other foreign stock markets for a short period of time at least. So I wouldn't just be fully invested in stocks, period. I really think it's important to have some stuff outside equities.
If you're looking at foreign exchanges as well, do you have to look at the value of the U.S. dollar?
Well, you do if you're not an American investor, that's for sure. And the U.S. dollar has been dropping in value. That's going to affect anyone that, say, you're in Canada and you're investing in the U.S. stock market. That's going to make those investments much less attractive. And the dollar has really come off its highs over the past couple weeks. And frankly, I think it does have a lot to do with the political situation and interest rates themselves, which is very important. Coming into this year, there was an expectation we'd see 4 rate hikes this year. We got 2, and the odds are slipping almost every month that we'll get 1 more in December. So the interest rate picture is a lot more dovish than it was at the beginning of the year, and consequently, the dollar has been dropping. Now, if the stock market were to pull back at all, just 15%, just 10%, then the odds of that December rate hike will basically go to 0, and I would expect the dollar to fall even further. So for me as an American, I don't really worry about the value of the dollar because I'm invested inside the United States. It doesn't really impact me that much, and again, I would say gold, for me, the precious metals market will benefit anyway, so I don't care. But if I'm a Canadian, if I'm in Europe or somewhere like that, it would make me extremely wary of investing in the U.S. stock market. In fact, I would actually avoid it, and I'd choose something like Japan or investing directly in my own country instead. I would definitely consider the U.S. is something to stay away from if you're outside of it.
We'll have more with Mike Swanson right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Swanson. Mike, are we in a position where we might see a Black Friday like we saw August 25th 2 years ago, and ironically, we have an August 25th Friday this year?
Oh, yeah, that's funny. Yeah, well, I don't think that's going to happen. Now, what you're referring to specifically is something I would call a flash crash. And what happened then is the Dow came off of a high and fell like 4 or 5 days in a row straight down, and that caused a drop through the 150 and 200-day moving averages, and that resulted in a gap down of about 1,000 points on the Dow. That's why I'm calling it a flash crash. You wake up one morning and the Dow's down 1,000 points right on the open. That's scary stuff. Now, those things happened in 2011. There's something similar in August 2007. What's important isn't so much, there's going to be a one-day decline, but I think the real lesson from all those drops is that these type of panic declines happen when the market averages, S&P, NASDAQ, and Dow, go below their 200-day moving average. That causes the trading robots to basically turn off. It's usually enough of a loss level that it causes people to sell, get scared, or have to reduce their margin. And I think that is something that's likely to occur that's why I think we really have a high chance of seeing at least a correction, is because I think we're going to go through that 200-day moving average, that it did trigger the August drop you're speaking of. However, it also, led to not such a one-day drop in 2014, but more of a 12% correction that year in October. I think instead of a one-day drop, that something that plays out over a couple of weeks is more likely. Which, that's sort of a situation like we saw in 2016 in January, where the market fell for about 6 weeks. That's more of what I would expect to happen. These flash crash things are a little bit unusual and rare. Of course, the important thing is no one can predict exactly how the market's going to decline. What's more important is this 200-day moving average. We go through that, and you're going to see some sort of drop, and I'm fairly confident that's what we're headed for. So I think that's the most important takeaway, is it's going to drop, or most likely to, and that's the level to look for, that 200-day moving average, to really get worried.
So the equity boat will spring a leak, but it won't be torpedoed.
Yeah, I would say it's going to get one torpedo is going to hit it, but it won't sink it, but it's going to start, scared us in the boat, that's for sure.
Mike, thank you so much for chatting with us.
Thank you. Great to talk to you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.